All right, it looks like we have a decent number of people on, and we do have quite a bit to cover today, so we can go ahead and get started. Thank you so much, everyone, for joining today. I really do appreciate your time and appreciate you being here. And look forward to helping you understand more about your student loans and talking about how Savi can make managing them even easier. A couple of things before we get started. We'd like to let you all know that this workshop is being recorded and informational materials will be available to everyone after the session. We will also be posting a recording of this on our YouTube channel, so you can check out that as well as previous recordings there. During the presentation, if you have any questions, please feel free to put those in the Q&A. We will take a couple question and answer breaks throughout the presentation, and then with whatever time we have left at the end, we'll answer questions as well. And last, if you need closed captions, you can use those and turn them on using the link in the chat that I sent, which will give you instructions on how to get those activated. So as I said, thank you for being here today. My name is Jobe, and I am the Senior Associate of External Affairs here at Savi. So during today's presentation, we are going to go over an introduction as to who Savi is and what we do. After that, we're going to go over public service loan forgiveness, since that is the main program that we help borrowers apply for. And then we're going to spend the bulk of the time talking about major policy and program updates that are happening in the student loan world right now. After that, we'll wrap up with how you can get started with Savi and an overview of your Savi account so that you know what to expect. Like I said, if you have any questions during this time, please put those in the Q&A and we will do our best to answer as many as possible. So for those of you who may be new to Savi, here's a little bit about us. We are a public benefit corporation, and we started around 5 years ago to help borrowers just like you all. We are run by experts and advocates that have over 2 decades of experience, and many of us also have student loans of our own, myself included. So we have that firsthand knowledge that helps us to help you. And last, we're focused on savings. We help you find savings through programs like income-driven repayment plans, as well as public service loan forgiveness. So Savi's goal is to make it easier to manage your loans. We help simplify and digitize the eligibility process and applications for federal forgiveness programs. By working with Savi, users can reduce their student loan payment by an average of $150 a month. And on average, our users receive forgiveness of around $20,500. So working with Savi is a great way to take advantage of savings, make your monthly payment affordable, and get some loan forgiveness as well. So far, we've helped users find over $1 billion in projected loan forgiveness to date. And one of the biggest benefits is we do just have that one application. By completing it, you can see personalized options for all the federal forgiveness programs available to you. So let's talk a little bit about public service loan forgiveness, since this is the main program that we help borrowers apply for and the one that people are most interested in. In general, there are 3 requirements that you need to meet. Some people may have heard of this program, understand some of the requirements, but you may not know all the details that go into it, so let's do our best to break it down for you. First up, you need to work in public service for a qualifying employer. This is a government organization at any level, so this can be federal, state, local, or tribal government. If you don't work for one of those types, you can work for a not-for-profit 501c3. So by working for a government organization or a not-for-profit, you work for a qualifying employer, and you could qualify for public service loan forgiveness. With that said, it is important that you're working full-time. The PSLF definition of full-time is 30 hours per week. So you are required to work full-time for that time to count towards PSLF. For those of you that may not be working full-time at 30 hours, you do have an option still. If you are working part-time, you can combine part-time employment from multiple qualifying employers to reach that 30-hour threshold. So for example, say you were working 15 hours per week at a local government organization and 15 hours per week at a local nonprofit. You can combine those periods of time to reach that 30-hour threshold so that you can qualify as well. So that is requirement number 1, to work in public service. Requirement number 2 is that you do need to have qualifying loans. For PSLF, you are required to have direct federal loans. So unfortunately, private loans are not going to qualify for this program, only federal loans. If you have federal loans that are not direct, such as FFEL loans or Parent Plus loans, those will need to be consolidated so that they can be converted to a direct loan and can be eligible. After you have those direct loan types, you're good to go and you'll start earning credits towards forgiveness. And the final requirement is that you need to pay your loans on a qualifying repayment plan. So for PSLF, you are required to pay your loans on an income-driven repayment plan. Currently, there are 4 income-driven repayment plans offered, and as long as you are enrolled in one of those 4, you're on an eligible repayment plan. The payments you make can count towards PSLF. So those are the 3 requirements in a nutshell. Work in public service, have direct loans, and pay your loans on an income-driven plan. Once you're meeting all 3 of those requirements, you then need to make 120 payments on your loans. So this means that each of those 120 payments needs to be made while working in public service, while you have direct loans, and while enrolled in an income-driven plan. If you make a payment that doesn't meet all 3 requirements, it won't count towards your required 120 that you need. Once you've made your 120 payments, though, your entire remaining balance is forgiven. So whether you have $1,000, $100,000, whatever balance you have left, once you reach that 120th payment, your entire remaining balance will be forgiven. One of the great benefits of PSLF is that this forgiveness is not taxed at the federal level. So whenever you receive this forgiveness, it's tax-free. Great way to take advantage of this without having to worry about paying any taxes on it. Another benefit is that payments don't need to be consecutive, just cumulative. So for example, say you've made 60 payments on your loans and then you put them in a forbearance for a year. Once you started paying on your loans again, you would pick up at 60 to continue where you left off. So because the payments don't need to be consecutive, it could take you longer than 10 years to make your required 120 payments. However, with that said, you cannot make extra payments to qualify sooner. They'll only ever count 1 payment per month. So at a minimum, it will be 10 years of working and paying on your loans before you can receive this forgiveness. So how do you apply for public service loan forgiveness? You do this by submitting something called an employment certification form for all of your qualifying employers. The way this works is that both you and your employer sign this form, and you turn it in to a loan servicer called MOHELA. MOHELA is the loan servicer that manages public service loan forgiveness. And by turning in this form, you prove that you work in public service. MOHELA will go through and count up all of the payments you made at that employer and let you know how many of them count towards your 120 payments. They'll only look at the payments for the employers that you submit forms for. So if you have multiple employers, you need to submit a form for each one of them to get credit for all those payments. After you have submitted that first round of employment certification forms and you know how many payments you currently have, you'll then want to submit a form moving forward every 12 months to continue your progress towards PSLF. Technically, you can wait until you've made all 120 payments to apply, but that leaves you tracking down employers from 10 years ago, and it's more likely that something could be missed. And, it's just more of a headache and more kind of work to deal with. At Savi, we recommend you submit this form every 12 months. That way, you know exactly how many payments you have, you know that you're staying on track, and you can track your progress as you move towards forgiveness. This also ensures that you get credit for every payment, that you never get off track, and it makes that process a little bit easier. At Savi, we can help you with this, and I'll show you coming up soon what that process looks like. But we can help you estimate how many payments you already have and how many you still need. And we'll also be able to help you submit this form to apply for public service loan forgiveness. So Savi really is a great way to make this process a little bit simpler, and I'll show you what that looks like later on in the presentation. So now we're going to talk about major policy and program updates that are affecting student loans right now. There has been a lot going on in the student loan world recently. You may have heard about some of these changes in the news. And so we're going to take a deep dive into all of these topics so that you understand all of the new changes that are benefiting student loan borrowers. In this section, we'll talk about President Biden's brand new debt relief plan. We'll also talk about the payment pause and about how it is coming to an end and what you need to do to prepare for payments to start. We'll talk about some upcoming changes to public service loan forgiveness and the new one-time account adjustments, which are designed to give you credit for past payments. We'll talk about another new program called Fresh Start, which is to help borrowers in default. And then we'll wrap up with talking about a new IDR plan, which will be coming out later this year. At the very end, we're going to provide you with all of the important dates that you need to remember for all of these new updates. So first, let's start off with President Biden's brand new debt relief program. This was a brand new program announced by President Biden last year and was designed to give borrowers $10,000 to $20,000 in debt cancellation. The way this program works is that if you meet the income requirement, you can receive this debt cancellation. If you met the income requirement, you got $10,000 in cancellation. And if you had a Pell Grant, you could receive $20,000 in cancellation. However, due to ongoing lawsuits, this program is currently on hold, and this cancellation is not being given out. As of November 11th, the Department of Education has paused accepting applications, and they are not accepting any more right now. Some of you may have already applied, and if you did, they will hold your application and process it if they're permitted to continue. You may even get an email notifying you that your application was approved, but the cancellation can't be given out. Because this program is on hold due to the lawsuits works their way all the way up to the Supreme Court, and we're now waiting on the Supreme Court to make a decision on whether or not this can continue. On February 28th, the Supreme Court heard oral arguments to determine if the program was legal and if it can proceed. Now that oral arguments have concluded, the Supreme Court is deliberating to make their decision. They are tasked with determining the fate of the program. So here's how it will break down. If they rule in favor of the plaintiffs, this program will not continue. This means that the program won't reopen, and this cancellation will not be given out. However, if they find that the plaintiffs did not have standing, meaning they didn't have reason to sue, or if they rule with the Biden administration that the program is legal, the program will be permitted to continue, at which point applications will reopen, and the cancellation will be given out. The Supreme Court is pretty secretive with how they operate, so we don't know which way it's going to go yet. A decision is expected to be released sometime in May or June, and we are monitoring this situation. So as soon as that decision comes out and we know whether or not this cancellation will happen, we will be sure to notify you so that you can either apply or make sure to watch out for this cancellation to come through. So because the brand new debt cancellation program is on hold, the payment pause was extended to give the Supreme Court time to make their decision. So as of right now, payments will be paused until 60 days after a decision is released. However, if no decision has come out by June 30th, payments will be resuming 60 days after that. So under these conditions, the latest possible date for payments to resume would be September 1st, 2023. We do like to let you know that time during the payment pause will count towards public service loan forgiveness, providing a huge opportunity for eligible borrowers. So normally, you do need to be making payments on your loans in order to earn progress towards forgiveness. However, because the payment pause is a special situation, they are allowing you to count every month of the payment pause towards PSLF as long as you continued working. So here's how this works. Going all the way back to March of 2020, for every month that payments were paused and you were still working in public service, you can count that month as a qualifying payment credit. This means that by the time the payment pause is over, many borrowers will be able to receive over 40 free PSLF credits towards the 120 that they need. This means that you are almost a third of the way without having to pay a dime. So this payment pause is very beneficial, and we really encourage everyone to take advantage of it if they can, because it lets you get closer to forgiveness with even less money out of your pocket, meaning more forgiveness at the end of the road. A couple of kind of tips we like to share with everyone for preparing for payments to resume, because it is likely that they're going to be resuming later this year. We encourage you to make sure that your contact information is up to date with your loan servicer so that they can contact you and notify you when your payment due dates will be. If your payments are too high and unaffordable, we encourage you to work with Savi and take a look at some options available to you, such as enrolling in an income-driven repayment plan. By making sure that you are good to go with your servicer and you know exactly what your payment amount will be, you can prepare for those payments to resume. That way, when it starts, there's no headaches and you're good to go. Next up, some upcoming improvements to the PSLF program. So many of you may have heard of the temporary PSLF waiver, which happened last year. That was a temporary opportunity designed to help more borrowers become eligible for PSLF. Since it was temporary, that ended on October 31st. But the Department of Education realized how beneficial that program was, and they're working to make some of those temporary changes permanent. So coming up later this year, they will be improving the PSLF program to help people get closer to forgiveness and make it easier to apply. So first, in order to help you earn progress more easily, they'll be letting you count and get credit for late payments, installment, lump sum payments as well. So any of those types of payments didn't count in the past, but they can now count. They'll also be counting certain forbearance and deferment periods towards PSLF. So in the past, anytime your loans were in a forbearance or deferment, it did not count towards forgiveness. But under these new rules, certain forbearance and deferment periods like military service, medical treatment, even hardship deferment, several specific forbearance and deferment periods will be marked as in repayment so that you can count those periods towards your required service. And one of the biggest changes is they'll be letting you receive a weighted average of existing payments on new consolidation loans. So in the past, when you had to consolidate to convert to direct loans, your payments reset to zero and you had to make 120 more. However, under these new rules, when you consolidate, you'll get a weighted average of your existing payments. That way you don't have to fully restart and you can continue your progress to get that forgiveness sooner. The second thing the department will be doing is making it easier to certify your employment. They'll be doing this by applying a standard of full-time employment at 30 hours a week. So under the old rules, you had to work 30 hours per week or your employer's definition of full-time, whichever was greater. So if your employer's definition of full-time was over 30 hours, that meant that you may have to work 35 or 40 hours. But moving forward, anyone working 30 hours is going to be considered full-time to make that process a little bit easier and a standard across the board. They will also be allowing adjunct faculty to multiply the credit hours they teach to get closer to that 30-hour threshold. So if you're an adjunct faculty member, you'll be able to multiply your credit hours by 3.35, letting you get closer and hopefully over that 30-hour threshold so that you can qualify as well. And finally, they'll also be allowing contract workers to certify employment in certain cases. So for example, in some healthcare situations, healthcare workers are contracted with the hospitals rather than being direct employees. Under these new rules, if you're a contract employee working on behalf of a public service organization, you can certify your employment towards PSLF to get credit for that time period as well. So there's a lot of exciting changes coming to the PSLF program and a lot of improvements that will make it easier to get closer to forgiveness. As always, Savi is monitoring the situation, and once these changes are implemented, we'll be sure to notify everyone so that you can apply, take advantage of the changes, and hopefully get even closer to forgiveness. Last year, the Department of Education announced that they would be conducting a one-time account adjustment to address longstanding problems borrowers had faced. So what the Department of Education realized is that when pursuing IDR forgiveness enrolled in income-driven plans, there have been historically a lot of issues working with servicers. And the Department of Education realized that, so they're going to be conducting an account adjustment to give you credit for past periods of repayment. That way you can count them towards forgiveness. So next year in 2024, they'll be conducting this account adjustment and giving you credit for the following periods of time. Any month that you were in repayment, regardless of whether your payments were partial, late, your loan type, or your repayment plan. Any past payment is going to be marked as in repayment to be counted towards forgiveness. In addition, any months in which loans were in an eligible repayment, deferment, or forbearance status prior to consolidation. So rather than consolidating and starting over, any payments you made before consolidating will now be marked as in repayment to count towards forgiveness too. They will also be giving you credit for certain forbearance and deferment periods. So if you were in a forbearance for more than 12 consecutive months or 36 months cumulatively, you'll be able to count those periods as in repayment. Also, any month spent in deferment before 2013 can be counted, the exception of an in-school deferment. So there's a lot of changes and there's a lot that they're going to be doing. But really what it boils down to is they're going to go through your loans, look at all these past periods, and if it's a period of time that matches these criteria, it will be marked as in repayment so that you can count it towards forgiveness. What this means is that many borrowers will see their progress towards forgiveness and get even closer to the required number of payments. The other great thing is this will be done automatically for anyone with eligible loan types. So there's no application you need to apply for, nothing to worry about that. They're going to go through and automatically do this adjustment and mark those periods as in repayment. The one thing you do need to make sure of, though, is that you have the correct loan types to be included in this account adjustment. So to receive credit under this adjustment, you must have direct loans or THEL loans that are managed by the Department of Education. If you don't have those loan types, you need to consolidate by the end of 2023. As long as you've consolidated and you have the correct loan types, you'll be included in this account adjustment. And if you are pursuing PSLF, the next time you submit your employment certification form, they'll update these periods to count them towards PSLF as well. So these account adjustments are going to be very beneficial for borrowers and help many people get even closer to forgiveness. The Department of Education has also announced a brand new program called Fresh Start. This is designed to help borrowers that are in default get back into good standing quickly so that they can take advantage of resources. So if you are a borrower in default, this program is specifically for you. In the past, to get out of default, borrowers had to consolidate and pay high fees, or they had to participate in lengthy loan rehabilitation programs. But in the new Fresh Start program, you can get quickly out of default and back into good standing. This will also restore your access to income-driven repayment plans, forgiveness, and let you take out new student loans. This will also stop wage garnishment, so there will be no more wage garnishment and no collections calls made to anyone who participates in Fresh Start. If you have a defaulted direct, THEL, or Perkins loan held by the Department of Education, you are eligible. They've made this process really simple, and all you need to do to take advantage of this is opt in via phone by calling your collections agency. Simply give your collection agency a call and let them know that you want to participate in Fresh Start. Once you do, you'll be transferred to a new loan servicer, brought out of default, and be put back into good standing. From the time you make that call, it takes about a month to complete, and you'll be back in good standing and ready to go. So if any of you are in default, we really do encourage you to participate in a Fresh Start to get into good standing and make sure that you are in the best position possible for payments to resume later this year. Rolling right along, another new program the Department of Education has announced is that later this year, they are going to be revising the income-driven repayment plans to make a new plan. So later this year, they're going to be changing the requirements for the repay plan to help lower monthly payments. This new plan is going to be 5% of your discretionary income for your undergraduate loans and 10% for grad loans. Currently, it's a flat 10% rate. Everyone enrolled in this program pays 10% of their discretionary income. But under these new changes, it's a 5% for undergrad, 10% for graduate. So many borrowers will see their monthly payments reduced, and some could even see their payments cut in half. If you have a mix of undergrad and graduate loans, you'll have a weighted amount based on your loan types and balances. So your monthly payment would be ranging somewhere from 5 to 10% of your discretionary income. I think one of the biggest benefits of this program is that any unpaid interest will also be covered, so your loan balances will not be increasing. We've seen time and time again where borrowers are making their monthly payments every month, and those loan balances are never decreasing because of those high interest rates. But if you enroll in this brand new plan, your unpaid interest will be covered and will never increase. That way, your balance is always decreasing and you can make progress and finally get to that financial freedom. This plan will also be raising the amount of income that is considered non-discretionary. So really what this means is that they're going to be counting less of your income towards your monthly payment so that your monthly payments can be lowered. So no borrower making under 225% of the poverty level will have a student loan payment. If your income is below that amount, they will approve you for a $0 monthly loan payment, and you'll also stay in good standing. They're also tweaking the requirements for forgiveness. So income-driven repayment plans do have their own forgiveness programs. As of right now, once you have been enrolled in an income-driven plan and paid for 20 to 25 years, whatever balance you have left is forgiven. But with this new plan, borrowers that have a loan balance under $12,000 can receive forgiveness after 10 years instead of 20. So a great way to lower your monthly payment and get forgiveness even sooner. This new plan is expected to be implemented before payments resume. So payments are expected to resume later this fall, and we're expecting that this plan will be available before then. That way you can enroll and start your new payments on this brand new plan. Same with everything else per usual. Savi is going to monitor this and will let you all know when this plan is available so that you can enroll and take advantage of those additional savings. So I know that was a lot of information. So here are the important upcoming dates that we want you to remember. In February, the Supreme Court heard oral arguments on President Biden's debt relief plan, and we are expecting them to release their decision sometime in May. By June 30th, if that decision hasn't come out though, that's the last date and payments will be resuming 60 days from then. In July of 2023, the PSLF improvements will take effect. So all of those improvements to help you get progress towards PSLF more easily will become permanent. In September, that's the expected payment start date, which is 60 days after that June 30th deadline. December 2023 is the deadline to consolidate loans to receive the full benefits of those one-time account adjustments. So if you don't have the correct loan types, be sure to consolidate before December to be included in the adjustments. And finally, in early 2024, those account adjustments will be taking place to give you credit for those past payments. So as you can see, there's a lot happening right now. There's a lot more on the horizon. Savi is always going to be here to help you understand this, break down these new changes for you, and make sure that you are taking advantage of everything you qualify for so that you can have the lowest monthly payment and get the most forgiveness. All right, so let's take a quick break for questions. I know that was a ton of information. I'm sure you have some questions about it. So we'll take a break and answer those. And then in the second half of the presentation, we'll talk about how Savi can help you manage your loans and help you see everything that you qualify for. So someone asks a great question. They say, I'm recently married and I filed my taxes jointly. Is my partner's income taken into consideration when enrolling in an income-driven plan? So if you are married and filing jointly, your spouse's income will be included with yours when calculating your payment. So for income-driven plans, they look at your adjusted gross income from your most recent tax return. If you file your taxes jointly, though, there's only one adjusted gross income number provided for both spouses. This means that your spouse's income will be included whenever they calculate your monthly payment. You'll be able to see your estimated monthly payment on the Savi website, and I'll show you exactly what that looks like coming up soon. That way you can understand the options available to you and make sure that you're enrolling in an income-driven plan that gives you the lowest monthly payment. Someone says, if we do not work for an eligible employer, does that mean this program isn't available to me? So there are several different forgiveness programs available to borrowers. One of those programs is public service loan forgiveness. So if you don't work in public service, unfortunately, you wouldn't qualify for public service loan forgiveness. However, you can still qualify for income-driven repayment forgiveness, which is that program that forgives your loans after you've paid on an income-driven plan for 20 to 25 years. You can also qualify for President Biden's brand new debt relief program if it is permitted to continue. So just because you're not working for an eligible employer doesn't mean you don't have options. And as for repayment, you can still explore income-driven plans. That way your monthly payment is low and affordable. Someone asks another good question and says, are there any consolidated loan types that don't count for PSLF? And in your specific question, you say that you consolidated in the 1990s. So before direct loans were available, there was a loan type known as an FFEL loan, which we call FEL loans. Unfortunately, FEL loans are not an approved loan type for public service loan forgiveness. So if you consolidated before direct loans were available, you likely have a FEL consolidation loan. The good news is, though, you can consolidate it to convert it to a direct loan. So it's kind of a special exception just for those that have consolidated. Normally, consolidation is combining multiple loans into one. But in your case, it would be more of a conversion where you can convert your FEL consolidation to a direct consolidation loan. So you can check your loan type by using the Savi website, and we can let you know if you have the correct loan type already, or if you need to take some extra steps like that consolidation. Another good question, will months in forbearance count towards PSLF? So technically right now with the payment pause, that is considered a forbearance. It's a national emergency forbearance. The payment pause forbearance will count towards PSLF as long as you were working. They will also be doing that account adjustment, giving you credit for past forbearance and deferment periods. The account adjustment periods will also be counting towards PSLF. So if you have any of those forbearance periods that are marked as in repayment, once you certify your employment, you can get credit for those forbearance periods as well. Someone says, does consolidating loans impact the one-time account adjustment? So if you do not have the loan types needed to be included in this adjustment, which are direct or FEL loans held by the Department of Ed, you will need to consolidate to be included. Consolidation will not impact the account adjustment, and if you consolidate to get the correct loan types, they'll be included when it happens. The great thing about this adjustment is they're going to go through and look at all of your past payments. And for borrowers that have already reached the required 20 to 25 year of repayment, you'll see your loans forgiven automatically when that adjustment happens. So in your specific question, you say that some of your loans you've been paying on for 25 years already. If you have the correct loan types, or if you consolidate to get the correct loan types, when this account adjustment happens and they see that you paid for that 20 to 25 year period already, those loans will be automatically forgiven. So we really encourage you to consolidate if need be and participate in this account adjustment since it really is so beneficial. Someone says, do I qualify for the adjustment if I had a FFEL loan and I consolidated to direct in 2022? You do. So since you consolidated and you've got direct loans now, you will be included in the account adjustment. And any payments you made before consolidating will be marked as in repayment and applied to your new consolidation loan. So yep, if you've got direct loans, you are good to go for the adjustment. So someone asks a great question and they say, I've met the PSLF requirements and I've been paying for almost 10 years now. What are my next steps and what should I do? So if you think you qualify for PSLF, or if you think any of the payments you've made can count, all you need to do is submit an employment certification form for your employers during that time period. Once you submit the forms, Mohila will let you know how many payments you have and how many you still need to receive forgiveness. So if they count up and you're not at 120 just yet, that just means you've got a little bit more to go, and we'll apply again to get you credit for payments in the future. If you apply and they count up 120 though, your loans will be automatically forgiven. So it's really beneficial to submit that employment certification form to see what you've already got and what you still need. You can submit that form through Savi, and I'll show you how to do it coming up in just a minute or two. Someone asks a really great question and says, if I'm eligible for that President Biden's debt relief plan, will that affect my monthly payment on an IDR plan? So IDR plans are based on your income and family size, not on your loan balance. So even if you receive that cancellation of $10,000 or $20,000, your monthly payment wouldn't change since it's calculated based on your income. However, if you are in a non-income repayment plan, like the standard plan or the extended repayment plan, those plans are based on your loan balances. So those plans will be automatically recalculated based on your new balance to lower your monthly payment. But if you're in an income-driven plan, your monthly payment wouldn't change since it's calculated based on your income and not your loan balance. And last question for now before we continue on, someone says, is there a deadline to consolidate to be included in the account adjustment? The account adjustment will take place in 2024, so you just need to consolidate by the end of 2023, which means absolute latest December 31st, you need to consolidate by. Savi is recommending that you consolidate by October. That way you've got time to make sure the consolidation goes through, and it gives you 2 months, just to take care of any issues that may arise. So the sooner you consolidate, the better, but absolute latest, make sure you do that by the end of this year. All right. We're going to continue on now, and I'm going to talk a little bit about Savi, and we'll take another break to answer some questions at the end of the presentation. So we covered a lot of information, and it can be hard to figure out how to navigate this on your own. But luckily, Savi is here to help and make it easier. With Savi, you can explore personalized IDR options and track your PSLF progress. You can also receive updates on things like the PSLF improvements, debt relief, and more. With Savi, we'll also remind you when it's time to recertify your IDR plan and update your employment certification every year. And some of the biggest benefits, you can sign and submit your applications digitally through Savi. And you can receive personalized support from student loan experts so that you can get all your questions answered and make informed decisions about your loans. So this is what the main Savi dashboard looks like. After you've got access to your account, this is where you'll be able to see everything you're working on at a glance, including all of the applications, and you'll have access to settings for your account. One of the features that you'll see on the dashboard are the announcements. So this is where we let you know about important things like payment pause extensions or payments resuming. And we also let you know about upcoming events. So you can sign up for upcoming events just like this one to stay in the know with your student loans so that you can keep up to date with everything. If you want to attend any more events, simply click to learn more from the announcements page on your dashboard. You will also have the opportunity to invite friends and family to use Savi from your dashboard too. So if you know anyone that you think could use some help with their student loans, you can enter their email and send them an invite to use Savi. That way they can get help with their student loans as well. From your Savi dashboard, you'll also be able to select a Savi plan. We do offer different levels of service here at Savi. We have our free DIY plan, which lets you see your estimates, see what you qualify for, and complete the applications on your own. Our most popular plan is our Essential plan, which unlocks all the features of Savi. It allows us to create your applications digitally, help get them submitted on your behalf, and gives you access to Savi support. You can take a look at all the plans that Savi offers by clicking Select a Plan from your dashboard and choosing the one that is the best fit for you. Remember though, it's free to complete our application and see what you qualify for. So you can go through, see everything available to you before you enroll in a plan. All right, that's the dashboard. Let's take a quick look at the application so that you can see what to expect when filling this out. This application will ask for all of the necessary information to show you personalized options for all of the federal programs that we've discussed. First, we'll ask for your family information, since we'll use that to determine your monthly payment on an income-driven plan. After that, we'll ask for your income information to see how much you're currently making and get you those estimates as to what your payment could be on an income-driven plan. After that, you'll go to the employment page. And on this page, you can add in all current and past employment to see if they qualify for PSLF. So remember, a qualifying employer is a government organization or a nonprofit. If you're not sure what type of employer yours is, you can add them on this page and we will let you know if they qualify. We have a database that has over 1 million employers in it. So the easiest thing to do is click Add Employer, search through our database, and get them added to your account. We can also help you submit those employment certification forms to apply for public service loan forgiveness, but we can only do that for the employers you've added on this page. So be sure to add all of your employment to see if they qualify and make sure you get credit for all of your payments. Next up is the Loan Sync page. On this page, you can add your student loans to your Savi account so that we can see your loan balances and get you estimates. By adding your loans on this page, we can confirm if you have the correct loan types for PSLF, or if you need to take additional steps like consolidating. The easiest way to do this is to sign in with the same username and password as your online servicer's account. Once you do this, it will take a snapshot of your loans and pull over that information to Savi so that we can see what's going on and get you those estimates. We'd like to clarify here that Savi is not a loan servicer, so adding your loans on this page does not take any action on them yet. It just gives us a snapshot of what's going on so that we can take a look and get you those estimates. Finally, once you've got that application completed, you'll be able to see plan options. You'll be able to see all of the income-driven or payment plans you qualify for, including what your monthly payment would be. You can see an estimated timeline towards forgiveness and see how much you can get forgiven by enrolling in each of these plans. Our application will automatically show you the plan that gives you the lowest monthly payment and the most forgiveness. But if you want to see everything you qualify for, you can click Show More Plans to see everything that's available to you. Once you've explored your options and you found the one that's the best fit for you, you can click Continue to create those applications and get enrolled. So it's free to see what you qualify for to get all the way up to there. If you decide to enroll in Savi's Essential membership, we'll be able to create those applications for you digitally to make that process easier. On the left, you can see what it looks like when you create your employment certification forms for all of your employers. You can enter their contact information, and we will take care of sending the form to your employer, getting it signed, and getting it submitted. On the right, you can see what it looks like when you enroll in an income-driven or payment plan. The number one reason that applications are denied is because they're filled out incorrectly. But by working with Savi, we will pre-fill the application for you to ensure it's completed correctly and has the best chances of being accepted. Once you've got those applications created, you'll be able to track their statuses back on your dashboard. You can see exactly what step of the process you're on, whether your application has been signed and submitted and processed. You can also track the status of your IDR application to know exactly what steps you still need to take to get that turned in and get all of these applications to 100%. If you have any questions, we are here to help. You can click Contact Support from any page of the Savi application to reach out and get some help. You can consult our Help Center, which includes articles on common student loan topics, frequently asked questions, and even how-to videos that walk you through completing the application. If you're an Essential member, you'll be able to reach out to support to get personalized help with your student loans. And we just recently launched a brand new call center. So anyone can reach out to our call center Monday through Fridays from 9 to 5. You can get the phone number for that by clicking Contact Support, and it will provide you with the number to get live real-time support as well. So in order to get started with Savi, we've tried to make this as easy as possible for you. As soon as this presentation is over, you will receive an email with instructions on accessing an account that we have already created for you. All you'll need to do is follow the email instructions to set a password for your brand new account, and you'll be able to access Savi. So be on the lookout for that email as soon as we finish this presentation so that you can get started today. If you're a returning user, feel free to log back into your account at buysavi.com. All right. Next steps. Be sure to access your Savi account, and new users be sure to check your email for instructions. That email should be arriving in the next few minutes. Once you have access to your Savi account, we encourage you to enroll in Savi's Essential Plan to unlock all of our features and make that process as easy as possible. And finally, be sure to complete your application to see what you qualify for. If you need any help, feel free to reach out to support, give our brand new call center a call as well. So thank you so much, everyone, for attending. I really appreciate your time. I look forward to working with all of you. So be sure to check your email, get signed up today. For those of you that